Welcome to Tesla Stock Daily Drive, where we take a closer look at the financial world through the lens of one of its most intriguing players, Tesla. I'm Dusty, your host, ready to navigate you through the market maze with a calm and thoughtful approach. Today was a bit of a mixed bag for the markets. U.S. stocks ended mostly lower after a rather volatile session. With the eyes of the world on U.S.-China trade negotiations, along with an array of inflation data streaming in, it was no surprise to see fluctuations. The Dow dipped ever so slightly, the S&P 500 went down by 0.3%, and the Nasdaq slid by 0.5%. Despite this, our major indexes are still cruising for a third straight week of gains. The fear gauge, or the CBOE Volatility Index, ticked up slightly, which isn't unexpected given the backdrop. On the economic indicators front, inflation data was softer than expected. The Consumer Price Index for May showed a minor 0.1% rise, pulling back from the anticipated 0.2%. It's fascinating to see how these micro-thresholds of difference can ripple through investor sentiment. In company news, amid an overall subdued market, Oracle was the star, soaring nearly 13% after better-than-expected earnings. On the flip side, Boeing struggled due to distressing news of a 787 Dreamliner crash, while Intel took a significant hit in the Nasdaq. Meanwhile, the energy sector found a silver lining, buoying slightly as other sectors struggled. Now zooming in on Tesla, the heart of our discussion. Tesla traded at $319.23, down 2.17% for the day. It's coming off a four-session winning streak, driven by buzz around its upcoming robotaxi launch. What's interesting here is the recent recovery, despite a turbulent backdrop. Year-to-date, Tesla is down around 19%, but it's up an impressive 91% compared to this time last year. That kind of fluctuation tells a story of resilience mixed with caution. Analyst opinions are divided. Piper Sandler sees a positive outlook, affirming an overweight rating with a hopeful $400 price target. However, they do warn of risks should there be any mishaps with high-profile initiatives like the robotaxi launch. On a more skeptical note, Wells Fargo is cautious, not impressed by recent global delivery numbers, and maintaining an underweight stance. In the broader picture, Tesla has watched its U.S. EV market share slip from a commanding 75% in early 2022 to under 45% in the first quarter of 2025. The upcoming robotaxi launch could shake things up, but it's a wait-and-see game. Here's a tip for investors who are tuned into Tesla's narrative. While we should keep an eye on the short-term fluctuations brought on by market sentiment and external conflicts, it's the long-term potential and strategic initiatives that often hold the key to enduring success. Keep tabs not only on market performances, but also on innovations and leadership shifts within the company. Thanks for joining today's deep dive on Tesla and the broader market dynamics. Remember, whether the market is up or down, stay informed, stay curious. And when the dust settles, only the truth remains. Catch you next time on Tesla Stock Daily Drive.